Okay, let's get right into it. We're talking about one of the biggest financial choices you're going to make, year after year. Roth IRA versus traditional IRA. And, getting it wrong, or even worse, not making a choice at all, that could seriously cost you thousands, maybe hundreds of thousands down the road. You know the scene. It's April. You're staring at your tax software, and that refund number is just blinking at you. Your heart is screaming, "Take the deduction! Make that number bigger right now!" But then there's that little voice in your head, the one whispering, "But what about future you?" So you start Googling, right? You watch a few videos, you read a few articles, and somehow you just feel more confused than when you started. Let's just cut through all of that noise and get to what actually matters. Look, this feeling of being completely stuck, it's normal. It is an annual headache for millions of us. But what if I told you the whole way we think about this debate is kind of flawed from the start? So here's the absolute key. This isn't a fight between a good account and a bad account. It's a strategic choice about timing. It's about one simple question. Do you want to pay the tax man now, or do you want to pay him later? And believe me, that one little difference changes everything. And once you really get that it's all about timing, we can start to push back on some of that conventional wisdom that honestly leads a lot of people astray.
You hear it all the time. Take the deduction now, it's the obvious move. I mean, why wouldn't you take what feels like free money from the government today, right? It sounds so logical, but this kind of short-term thinking can be a massive, massive trap.
So get this. According to IRS data, the average retirement account for Americans who are getting close to retirement is under $200,000. Just let that sink in. It's not because investing doesn't work. It's because so many of us are wired to focus on today's tax bill instead of tomorrow's wealth. The way they work is actually pretty simple when you break it down. With a traditional IRA, you use pre-tax money. That lowers your taxable income today, which is nice, but you're going to pay taxes on every single penny you take out in retirement. A Roth IRA, it's the total opposite. You use after-tax money, so you don't get a break now, but all your qualified withdrawals later on, 100% tax-free. Okay, feelings and gut instincts are one thing, but you know what? Math doesn't lie. So let's just run a quick scenario and see how this actually shakes out over the long run. All right, let's set the stage. We're going to invest $7,000 every single year. And we're going to be consistent. We'll do this for 30 years straight. And let's just assume a pretty reasonable 8% average annual return on those investments. So, $7,000 a year for 30 years at 8%. You know what that turns into after 3 decades of compounding? Almost $800,000. It's an incredible number. But how much of that do you actually get to keep? And this right here is where the choice makes all the difference. Look at the traditional IRA side. That nearly $800,000 balance is amazing, but don't forget, the IRS is waiting for their cut. If you pull that money out in, say, a 22% tax bracket, you owe about $174,000 in taxes. Ouch! Now, look over at the Roth IRA column. Same balance, $792,000. And the taxes owed? Zero. Not a penny. Every single dollar is yours, completely tax-free. Now, the whole argument for the traditional IRA really hangs on one giant assumption, that you'll be in a lower tax bracket when you retire. But let me ask you, can you really guarantee that? I mean, the Congressional Budget Office is already projecting that federal tax revenues are going to have to go up in the coming decades. Is that a bet you're really willing to stake your retirement on? But this whole decision isn't just about math and spreadsheets. It's about psychology. It's about how our brains are literally wired to think about money and risk and reward. And let's just be honest with ourselves for a second. We are just not built for super long-term thinking. Our brains will almost always choose a small reward right now over a much, much bigger benefit way off in the future. And this is the core battle that's happening in your mind. The traditional IRA, it offers you that hit of instant gratification, a bigger tax refund this April. The Roth IRA, well, it demands delayed gratification. You feel a little bit of pain today for an absolutely massive tax-free reward decades from now. Here's a really simple way to remember the difference. Think of a traditional IRA like you're renting your retirement account from the IRS. They're always going to have a claim on your profits. But a Roth IRA? That's like owning the entire building outright. You've already paid off your partner, and all the future growth is 100% yours. So when you mash the math and the psychology together, what's the actual choice we need to make here? What's the real risk we're trying to avoid? I mean, is the tragedy picking the account that's just slightly less perfect for your exact tax situation? Is that what we should really be worried about?
No, the real tragedy isn't choosing the wrong IRA. The real tragedy is choosing to do nothing at all. And that is the most important point of all of this. The cost of just standing on the sidelines while the market does its thing without you is so much higher than the cost of picking a slightly less efficient account. Analysis paralysis is the most expensive financial mistake you can possibly make. So let's get practical. Here is your homework for this week. Number 1, look up your current marginal tax bracket. Just Google it. 2, make a realistic guess about how much income you'll need in retirement. 3, decide what's more important to you right now, the tax break today or tax freedom later. And 4, this is the most important one, just open the account and automate your contributions. Consistency will beat perfection every single time. Ultimately, this whole thing just boils down to one simple question. It's not really Roth versus traditional, it's about what you truly value more. Do you want tax relief today, or do you want tax freedom for the rest of your life? The real gap isn't between the two accounts, it's between the people who invest and the people who don't. So please, just make a choice.